Summit has wrapped up in Japan, and here to tell us more about how it could affect the market is Brent Wilsey from Wilsey Asset Management. Good morning, Brent. Good to see you.
Good morning. Good to be here.
Okay, so Monday we're looking at things. So far, so good. It looks as though the markets are responding well to the G20 Summit.
And what's interesting about the G20, all we need to do is no negative news, and that's what we got. We got no negative news. They are talking again, so that's a big positive, a big jump today in the markets. I also believe this will carry us through next week, about the next 10 days or so. We're going to start seeing earnings report from companies, which I think will be good. So I think the G20 Summit, what happened there is positive. I think it's going to continue positive. So I don't think we have any negative things coming up this week in the markets. And one thing did come out was China, which I think helped, was China production, manufacturing, actually came in at like 49.5, below 50. Showing a slowdown, worse since January. So they are having troubles over there, which is why.
Which is good news for us
exactly,
in negotiations.
That's why they negotiate.
I mean, that's really what the markets have been responding to, is
Yep.
all this talk with the China trade talks, right?
Correct.
And whether or not they were happening. Also good news on Friday that we got to see these bank stress tests. What did they tell us?
Well, actually, we talked about this last week. I thought they'd be positive, which they were, and it tells us the banks are in very good shape. And what that meant is that now they can increase their dividends, they can buy back stock, and I think, gosh, like Bank of America is buying back about 10% of their company. Huge there. Some of the dividend yields on banks now about 3, maybe 3.5%, so that's positive. The banks are in very strong positions, so we're not worried about them defaulting. And good for the consumer, because they should be able to get good loans, and also, too, I think they're still a great investment.
Right. And this is an interesting week because it is 4th of July, so the markets close early on Wednesday, they're closed on Thursday, and everybody's feeling pretty patriotic, which usually bodes well for the markets, right?
Yeah, I think it's a good, feel-good week this week, and we do have some other numbers coming out on Wednesday. We have the non-manufacturing report coming out. It's going to be about 55.8, again, above 50 is positive, so that's good. We do have the international trade coming out, which I'm not too happy about. It's still a negative, like $55 billion, and I'm hoping that would come down with all the tariffs, but it doesn't seem to be. So we're going to watch Wednesday very closely, see what the international trade is as well, very important.
Okay, and on Friday, of course, we're seeing the June numbers being released on unemployment numbers, and that always is a big tell as to where the economy is really sitting.
Yeah, and that's a big number on Friday, because unemployment is expected to be 3.6%. We're looking for job creation of about 180,000. Now, if you remember last month, it was only 75,000, kind of sent some panic across the market. Oh my gosh, our market's slowing down. I think we could see some revisions to last month and the previous month, which would be even more positive. So if we get a good jobs number on Friday, more good news coming in, I think we will.
Do you get a sense, I mean, and listening and watching the markets and listening to all the analysts, you know, the economy is doing amazing. Stocks are great, we're breaking records, but you kind of get this sense that nobody's really reacting. We're seeing home purchase numbers go down. It doesn't seem as though people are really responding too much. Is that because of the Great Recession? Or have we been kind of tamed down to really not get too excited and too comfortable when times are like they are right now?
Well, I think people are still kind of waiting what's around the corner, and that's the concern. Plus, we did have rising interest rates, which now have come on down, which is be positive, but the housing market lags. So what you're kind of seeing is maybe from a couple months ago, now the 10-year treasury around 2%. That could cause, you know, home buying to go back up again, but it takes about 2-3 months to catch up. But people are still kind of waiting, well, what's going to happen? And let's not forget about the SALT tax, especially here in California. That really hurt us Californians because our prices are so high, we don't get to deduct as much as we used to.
Yes, we are seeing prices go up in a lot of areas, and perhaps wages. I mean, that took a while to see a little tick up, but still not as high as maybe some would like.
Yeah, we are seeing wages increase. I think wage growth was about 3% on an annualized basis, which is still good, but not quite keeping up with the housing market. And again, we California, San Diego, our housing prices are so expensive. A movement in the interest rates upward really hurts quite a bit. And I did some numbers on it. It doesn't hurt as much as people may think it does, but it's a psychological thing. If like, oh my gosh, rates are up a quarter of a point, I can't afford that house any longer. And I've kind of figured it out that, well, if you just drop that Starbucks once a day, you probably could afford that difference in the interest rate.
Yes, a $4 coffee every morning is not a good way to get into the
Some people have
home
two.
buying.
Yeah.
Ooh, that hurts. Brent Wilsey, always appreciate your expertise. Definitely some good and bad to take away, but mostly good.
Yes, mostly good. I'm very happy right now.
All right, good to hear. Thank you. Well, this Thursday.